Hello, everyone. Welcome to The Rise. In today's episode, we have Aydin, founder and managing partner at Felicis Ventures. Felicis raised their first institutional fund in 2010 and have been on an absolute tear ever since, closing their Fund 10 earlier this summer, a $900 million vehicle in June, and will call out have raised every 2 years like clockwork. In this episode, we cover Aydin's start in Silicon Valley at Google, the early angel bets that propelled him to founding Felicis, with over 19 IPOs, 27 unicorn exits, 31 active unicorns, and 245 active portfolio companies, including Mercor, Supabase, N8N, and Runway. Aydin discusses how Felicis operates in founder mode, why they named Felicis based on the word fortunate, why reinvention always beats pattern recognition, and why the moment and the time is now to make bold bets in next-gen talent. I hope you enjoy today's episode. Aydin, thank you so much for being an early guest for On the Rise. I haven't told you this, but I always have nerves when I meet legends for the first time. And I'm a weirdo who's obsessed with venture capital and have been for a long time. So the first time I saw you on Calendar just for an introduction, extremely nervous. In the first 5 minutes, I felt so energized and fired up. And you have this like innate ability to get people very comfortable very quickly. So I wanted to share that. And again, like thanks for being here today.
No, my pleasure. In fact, maybe let me start with something about me that you might not know. First of all, you're among friends. And I'm really looking forward to this conversation. Just so that, growing up, my mother was my role model and she was an HR executive and later on a recruiter. So I feel like this could be a family conversation, in the kitchen, just happens to be about interesting topics, but absolutely looking forward to it and thrilled to be here.
I think the track record that you've accumulated since the first institutional fundraise in 2010 is pretty remarkable. You are, in Felicis, one of 8 VC firms with a track record of backing 8 mega unicorns with outcomes, mega unicorn $5 billion outcome. You are the only one alongside Thrive who sits outside of the legacy multi-stage. I think that's extremely impressive. You backed 50 companies that are now valued over $1 billion. You have 125 portfolio companies that have been acquired or gone public. You just announced a $900 million Fund 10 earlier this summer. When you hear these stats, what do they mean to you?
First, they're really exciting stats. It's also incredible that having once dreamed that we would be in a really great place, but now hearing those and realizing that 2 decades of work culminated in these, it's an incredible feeling. I really believed that a great firm could come about from scratch. And where we are today is, I think, testament to our early vision that we wanted to have an amazing track record, but in a differentiated way by putting founders first, having empathy for them, also having a unique strategy. I think either broke or bent every venture adage. So one of the things that I'm proud of is not just the stats, but what the stats stand for, because when we said we're going to invest across the world from just Menlo Park, we're going to invest in myriad different areas for which we are not experts, people, I think, laughed us out of the room. In fact, our first LP that said yes was after 50 no's, which is another reason why we relate to our founders, because a lot of them go through an early experience that is full of setbacks before the rocket ship ride begins.
Totally.
So, but more importantly, the last thing that I will say is that more important than the track record, more important than the numbers, the thing that you can buy with money that I'm extremely proud of is that we found a bunch of amazing founders. We believed in them before anybody else saw something or the potential. And where they are today is what brought us to where we are today. So in other words, we're on the back of giants. We're on the back of amazing founders that gave us a chance. They felt something in us that believed in them and cheerled them and helped them and had more heart than anybody else. And that's where we are today. And honestly, after 2 decades, we feel like it's still day one. We have this kind of day one, day zero mentality of it doesn't matter what happened in the past, but it's kind of what you're putting on the plate today, on the table, today, tomorrow, next week, next month. And one last thing is that it's also here because we love what we do. It's a labor of love with people we really love and respect.
I think the real measure of a great investor is whether they can identify outliers consistently and not just once or twice. I think when we look at Felicis over the years, Shopify, Adyen, Canva, Notion, Twitch, among others, those are iconic brands. What makes it so difficult to find these outliers, and how do you think about sustaining that ability over 2 decades?
I mean, I can give you little stories about every single one of them, but I think once these companies make it, it comes through as if these companies all were inevitable, and they were not. The ideas were not obvious in the beginning at all. When we talked to Shopify, the idea was really great. There was some early traction, but no company like that has ever been built in Ottawa. When we first talked to Canva, people were so skeptical that next to giants like Adobe, it is very unlikely that a company from Australia is going to be the democratizer of design globally and be so popular and will turn into one of the 5 largest private companies in the world. When we invested in payment company Adyen, we had a thesis that almost every fast-growing company is going to run into issues handling international payments and finance. The company was so under the radar that when we first reported to Wall Street Journal didn't even know the company existed, which is a really fun anecdote. And one of the reasons I'm telling that is when you tell people that it was not obvious, people are like, what do you mean? Like, the company is really big now. How could it be not so obvious? Even after multiple rounds have happened, like, we reported to Wall Street Journal, like, we don't even know the company existed. Thanks for telling us. So it's just a matter of pride. And again, more than the companies and how far they've come, the thing that makes me most proud is we have seen this incredible potential, and we've been able to dream 20, 50 chess moves ahead. We thought about how things could go really right rather than 50 ways that it could go wrong. Luckily, things have worked out, and it has not been a straight path, but we have been with each one of them through good and bad, and very proud of what they've been able to do, and that the fact that we could have, we were able to join their journeys.
In 2018, when you announced your Fund 6, it was a $302 million Fund 6. But similar to the Fund 5 announcement, it came alongside a commitment to 1% Founder Development Pledge. What is the Founder Development Pledge all about?
So we wanted to keep building on the trust and commitment, and we also wanted to think of something that's going to set Felicis apart. It turns out that a lot of things in venture is not very original, and one firm kind of comes up with something and every firm is like, oh, let's have a version of that. And when we were thinking about what could be a signature initiative for Felicis, we did something different, and that is for 24 months, we interviewed about 24 founders. And what we asked them is like, look, at the end of the day, would it be really meaningful to you that we had content, or, we had a bunch of different teams helping you with different business function? Or if you basically set everything aside, at the end of the day, what is the thing that you feel most vulnerable about or most exposed? After maybe a few drinks, sometimes a few shots, what basically came through is that even if things went right, and especially when things went wildly right, it put an enormous amount of stress on the founders. And what basically they shared with us is that they did not feel justified to spend any money on themselves, which meant that any time when things were going wildly right, and it is always a stressful journey, they were essentially exposed and they were not investing in their own mental health or coaching and growth. And one of the reasons why trust relationship often breaks between founders and VCs is VCs are always asking founders to be their best, but when things don't go right or planned, then the first thing that happens is the founder that takes the blame and the ownership. But if you look at the sports world, to kind of compare and contrast, a lot of great athletes in many sports actually not just have a coach, but have a mental coach, because at the end of the day, to become a champion and to get to the top of your game requires mental resilience and mental strength. And we thought, well, being a startup founder is not unlike that. And how about we become kind of a catalyst of that. And we might not be their mental coach. I mean, we obviously always try to be their trusted partner, but it might be really great that we spend our money that they don't feel bad about, like getting coaching and whatever. And the idea is if they're unbreakable, we are going to preempt and prevent any points where they feel like they're falling short of the expectations, or even if there are stressful moments, we're essentially like, think of it as we're giving them a mental armor that they can block any of the like things. So instead of having, a discussion at the board level or even at an investor founder level, we're discussing tough things. They're like, you know what? Not only did Felicis to commit to vote their shares with us that we can trust them, they also basically committed to have our back and help us so that all we can focus on is building a great company.
20 years in, Felicis still operator, founder-led, I should say. What are the advantages and trade-offs of founder-led being the one steering the ship after Fund 10?
Look, the founder mode concept is one that we really like. Paul Graham coined it first. I think it came up from a discussion with Brian Chesky at Airbnb. And I think the message of that is if you want to build a great firm, like it could be like an operating firm. I mean, I think a venture firm is not unlike any other startup. At the end of the day, I think the only way to do that is, and not just be average, by the way, to be one of the top firms. You have to be in the weeds. You have to be in the details. You have to be committed to be 105%. And I do really think that it starts at the top. And I have seen the difference of the founders of Google running the company, and other people. And look, we have amazing CEOs, but the difference of a founder being involved, it's almost like with the founder, the firm really has a soul. It does make a really big difference. I think everybody can see it. And then the second thing is, I do have this concept, whether it's like from sports or military, if you're going to have a team and you're going to push them way beyond their limits, the first thing you need to do as a leader is actually do like 10 times the work. Be the first example, be the role model, be the first to come to the office, the last to leave the office, the last to leave the ship. Do the hardest things, tackle the worst problems. Hey, I'm asking you to do something, you know what? I'm doing 10 times. And I think you can do at least 10% of that. I think when you do that, it literally basically precludes any group of excuses of anybody saying, well, I don't really want to work that hard, or I don't want to do that. Well, you all don't want to do that. Why would you ask me to do that? And so it's just our style. But that's just only one aspect. I think the second aspect of it, and it's a very, very subtle one. Look, we don't get a lot of chance with founders. A lot of times, if we're lucky, we get, quite a bit of time with them. But most often it's an hour or two of conversation. Yeah. At the end of the day, in addition to the empathy and the trust that we want them to feel, what we really want them to get the impression, the people across the table are not on the other side. They are cut from the same cloth. They have the same fire and hustle. They have the same chip on the shoulder. They care about the company as much as they do, maybe even more. And how much better to demonstrate it than the founder, like being in the weeds, in the details, showing up, like no task is too small, no job is too small. And for you, everything you care about, we're going to get every one of those things right. That's the brand we want to build. That's the reputation we want to have. Because if you do that, then the world's best founders will work with you. And if they do, then the numbers will follow. But remember, numbers are always a consequence. They're a lagging indicator, not a leading indicator. It is something to be proud of, and we want to build on it. But again, we're, really want to invest and care about the things that are, leading indicators.
Taking a step back to your operating experience quickly. Before Felicis, you were in the trenches, early Google in the 90s. Early Google in the 90s had some of the most brilliant minds in the planet Earth, I think is fair to say. While you're at the company, you served in a couple of different capacities, including first product manager. You helped roll out the first 10 languages for the business during their international expansion in product. And you were working alongside folks who I would imagine had an impact and really shaped the way that you look at startups and investing more broadly. I'm curious, what was it like to join Google before it was the Google we all know today?
I mean, first of all, it was an amazing mission and it was an amazing time. When you're choosing a company, obviously one of the things that matters the most is, are you excited? Are you inspired what they're, attempting to do? how can you not be excited about the company that's going to democratize the world's information, especially coming from a place like Turkey where I thought about all the people in the world. What if all the information in the world all of a sudden was available to them? And just the dream was amazing. I think the second thing that I noticed, and this is not an easy thing to do, but as soon as I started talking to everybody at Google, I noticed how everybody was off the chart smart and humble, and nobody had an ego. And I'm like, wow, if I'm going to choose a company and take risk, why not take the company where I'm surrounded? And I'm going to be very humble myself and say, I think pretty much everybody was smarter than me. So I'm like, you know what? This is a great thing because it means that I only have upside. I'm going to learn with them. It's going to be fun. No moment will be dull. And that was my experience with Larry. Like the first experience was both exhilarating and scary at the same time. I think his philosophy was very simple. Every single person that works for me, every single thing I ask them is going to be 10x. And it's going to be so scary that the only way they can even contemplate of tackling it is essentially completely suspend any idea of anything that they can do that's conventional, and essentially come up with crazy, bold ideas, because unless they do that, there is no way they can even come close to even tackling what I'm asking to do. After I did that first launch, and which I thought was really, really great, it was so far off Larry and Sergey's expectation that I joked that this is when they decided, you know what, people should not be working on this. Anything that's translation, whatever, we should leave to the machine. So I always tell people I'm kind of like a god cousin or godfather of Google Translate, as a result of driving that and nudging that. But the other thing that I will say is, look, everybody thinks just because you're at a great company, the way to have a great career is to tackle all the obvious things. And so what followed next was actually essentially an orphan project where we didn't have a lot of people in sales. And the few people we had, all they wanted to do is do anything that was in the US. Nobody wanted to do anything international. There was nothing big. And I had this dream that, listen, if this is going to happen in the US, a lot of great countries in the world will follow, and they're going to have portals, and this is going to be just as important. And if nobody wants to do that, and I'm the one with the languages, I'll literally go to any country around the world, which I did, about 40 of them. And even though I've never done sales before, I realized that also, you have to very quickly figure out where you can add value to the company. And one of the great things about sales, nobody questions the value you bring. As a recruiter, if you make great hires, nobody's going to say, Alex, you're not a great recruiter. They're going to say you're the best. If we didn't have the track record, I don't think I would have been on your podcast. So You have to put the score on the board. And the best way to do that is either to build something great or, to put the dollars. And again, what I'm really proud of is what I started where what everything looked like peanuts. Within 6 years, a year after I left Google, just the companies and the deals that I was responsible, for closing, were generating about $100 million of revenue. So, again, it started very small and it looked like it was, it was something that nobody else cared about. But the reason why I'm mentioning it is I think everybody's image is if I'm only at the best company, if I only have the most plum job, but I think where you get the learning and where you really grow is actually, you know what? This is the stuff that nobody wants to do. I'm going to take that and turn it into a win. And in some ways, when you look at what Felicis does, we're going to find the founders that most people underestimated because we see something in them that nobody else has seen. If you look at team members, we have amazing people and we told them we see something in you, even you yourself might not have seen. So a lot of that goes back to my own experiences where I had to step in. It was an orphan project, or I myself was sometimes underestimated. And I like to call that rocket fuel. When you're underestimated, people tell you you're a loser or you can't do it. You won't have the talent to do it or capability or whatever it is they tell you. Just take all of that stuff and, translate it into a win with hard work.
I love it. Do you remember how did you apply to Google? Did a recruiter reach out to you?
I did apply to Google. And by the way, I barely made it to my job because I was on a work visa and it took 3 months to switch over. And I still have nightmares waking up where I would get weekly emails from Sergey, like, I don't know if we can wait for you. Can you just not marry someone? Like, this is taking way too long. Anyway, it's distant history. And, but it is to say that this journey, like, nobody knows all these details, whatever, is that it's another reason, like, when we have founders or they're going through tough times or they have an O1 visa or they're immigrant, whatever, you know what? Like, we've been there. I've lived through those things and I know how hard it is. And I think that's, again, like another thing that it's just like being able to relate to them and having been in their shoes, whatever that might have been in either an operating thing or some challenge they might have faced or something we experienced through our investments. And that's how we do, that's what we do, how we do what we do, which is putting ourselves always in their shoes and think from their perspective.
Do you think that operator DNA from Google gives you an advantage over career investors? And if so, how does it shape your own decision making?
Look, I think it's important in two ways. One is, like I mentioned, a venture firm is an operating firm, just like a startup, just like any other firm. And one of the things that I'm really lucky about is that through my career, I pretty much have done every function that is happening at Felicis. So, but what is really important about the Google part of the experience is I truly worked with people that were truly world-class in what they did in every discipline. And I think that's really important because what I think people underestimate about this business, whether it's the founders we back, the people we're trying to hire, or what we're trying to do, it's an outlier business. This business is very warp-sided. It's 595, not even 2080. Top 5% pretty much gets almost everything, 95% of the value.
Yeah.
Whether it's companies, it's the top 5% of VCs that generate most of the returns and have the hits. So whatever it is that you do, you have to break into the top 5%. It's literally as, binary as that. But what I also realized after 20 years of doing that is the only way to be an outlier performer is at some point in your life, you have to have an outlier experience. And so what I'm really lucky about is that I have worked at great companies, but I feel Google was the true outlier. And then I started getting that experience through companies I back like Shopify, Adyen, Canva, and so on and so forth. But then what I realized is all these companies look so disparate, so different from each other, different sectors, different everything. But the one thing they have in common is that what makes them outliers, it's almost like systematic. It's a different way of thinking. They're more articulate. They move a lot faster. And so without having that outlier experience, I think most often people confuse operational experience being really relevant. I think what you really need is you need to be exposed to outliers, however that may be, right? Like if it has come through operating experience, great. If it has come through investing, that's also great. Maybe you were a coach. I mean, who knows? Maybe you were with champion athletes, but in some way, you have to have been exposed to outliers, understand that that's what 1% looks like. In fact, that's what 0.1% looks like.
Totally.
Right? And that's literally what we're going for. And if you've never seen that, how are you going to see that and judge and say, yes, I can see, I can feel this is going to be 0.1%. At the end of the day, we have to imagine a future that doesn't exist. And if you've never seen that future play out, it's very difficult to have that imagination and have that be accurate.
100%. I think that was articulated perfectly. You made a post a couple of weeks ago. One of your mantras is that reinvention beats pattern recognition. You said if you don't reinvent before the wave crests, you risk being stranded inside riding the next one. My question to you is, when you say Felicis has reinvented itself with every fund, what did that actually look like inside of the firm?
Yes. So in many different ways. For instance, our strategy has been really the same strategy. We have expanded on it, but what has changed underneath is how we have implemented it with each fund. So we always said we're going to be generalist funds. Our strategy is always going to span sectors, span geos, and span stages. And we have been able to do that. But then if you look at each fund, we started as, hey, ex-Google, a lot of consumer and internet companies. And then all of a sudden it starts shifting into commerce and enterprise. Again, we caught that wave just right. Then the mobile wave kicks in. So we done some mobile companies. Then we were in financial services for some great companies when that was taking off. And then after that, we realized, and we have some success with hardware companies, but then there were whole areas of the economy that were like, wow, like even though we have some bets in AI, we were not that pervasive in that, or infrastructure, security, developer tools. So I think we have always like seen the opportunity as venture is very simple. It's a high growth game. The way to achieve high growth is essentially to basically not just ride any wave, but to ride a tsunami wave, right? Like unless you're riding a wave, it's very difficult to generate the kind of growth that we want. So imagine every venture capitalist is basically trying to be a surfer. And the idea is that you can ride an average wave or you can ride a tsunami wave. And then the idea is that every wave at some point hits the beach. Right? So I think what ends up happening is people ride that one big wave and they think their job is done. I made it, I rode the wave. But then they forget that the wave is eventually crash at the beach and you need to go back on the ocean. You need to start paddling again or take a jet ski or whatever, and you need to find the next wave. And let me tell you, it's not easy because you want to be anchored in what made you successful. That was so comfortable. You succeeded. You won. Why would you take that, throw it in the trash and say, I'm going to restart again and I'm going to try to find the next area? The temptation is, you know what? We can just do like 10% better. Let's just find like other versions of this product. Do that. But that's not going to get you to the excellence that you need to get to. And when you look at the history of like really great investors, a lot of times, a lot of their successes are concentrated on maybe one or two areas, but rarely do you find a situation where like, wow, whatever like sector, whatever geo, whatever stage somebody touched, like it literally almost turned into gold. And I think that's the result of that is partly strategy, but it's also execution. So when you see that, it is one of the reasons why when you enter this office, the first thing you see on our door is learn and adapt rapidly. And that's why reinvention is really important, is that number one, like you really want that. Also, you want that because this business is not about having success once. You really need to have it over and over and over again. And what caused you success the first time rarely is the thing that caused you success the second or the 10th or the 15th time.
When this reinvention happens, and I'm assuming maybe you have a new fundraise, it's about to close, close to almost all the way filled. Is this a partnership discussion where everyone's contributing kind of how they're feeling? Is this you and Sandeep kind of at the top making the call on strategy for the fund, or how is that approached?
I mean, look, strategy and execution of this is just one side of it. And it is teamwork. Everything we do, I mean, we have offsites, we debated, we always have a thesis, and it's a scientific method, right? Like we have an argument and we basically, ask people to participate in the debate. But there is also reinvention in many different ways. So for instance, when I started investing, I was sending in signature pages by fax. Now we don't do that anymore. We have DocuSign. When we started, we didn't have a finance team. Then we got a finance team. Now we have a research team. Now, half of like what we do, like it's sourced automatically. Like now we have a research team that has built a platform where we literally, I think, last month we processed about 1 billion data points just to look at stuff. Like the way that we do is also so different today. The concept is the same. We want to be in the world's best companies, but how we execute that strategy has also changed. So we reinvented how we think about venture. Like another really great example is our platform team. Just to give you the nuance, it's not that we are the first venture firm to have the platform team, but every other venture firm thought, this is an investment firm. You're in the platform team. You come after we write the check. We are the cowboys. We're the stars. You come in and you help us like clean things up or make things better. And we thought about it like, how great does it make you feel when somebody tells you, you're not the main star, you're not the main act, you're here just to help and we will tell you what to do. And we said, how about we do something different? How about we tell you, why don't you come with us and you're part of the deal investment team? It does not matter that your title is not investor, because what matters more than anything else is whether we can make a difference to the founder. And when we come in front of the founders, it surprises the heck out of them. They're like, wait, like a couple of you are investors and who are these other people? And we're like, you know what? This person is responsible for talent and operating at Felicis. This person is responsible for research. This person is responsible for people. Sometimes our CMO, Elisa, like whatever it is, if it's relevant to the company, they will be in the discussion. And first of all, it makes the people that are in the room feel like they really matter.
Smart.
The second thing is it makes the founders look at us and wow, they are acting totally differently, because you know what happens after that? We either win or lose the deal. But if we win the deal, There is no ROI that's higher than that. You either win the battle or you lose the battle. That's it. That's the score. So we changed the game and we said the only thing that matters is whether we win or lose. And if you want to be a winner, then you got to be part of the winning team. And that's the other thing. Why would we winning team be only one person? If that's the case, then why do we even have a team? So that's the other concept that we change, is that it's a little bit like Navy SEALs. Even if each one of them could take the world down, they never ever go on a mission alone. It's always 5, 6 people and everybody has a role. You have a sharpshooter, you have somebody who does communication, somebody maybe that's like doing like scouting, and somebody else is maybe the combat person. I don't know what it is. I drive my team crazy with Navy SEAL analogies, but I think the other thing that we have done is we basically went to great lengths that every win, every victory has multiple people associated with it. And what that does is basically, first of all, tells you you're never alone. You cannot claim credit for things solo, but it makes people feel like a winner. And when you're winning together, let me tell you, nothing builds a bond and a team like winning together. That's it. Especially against adversity. And let me tell you, like, I can tell you countless stories of when things were going badly wrong. There were 99 reasons we should have lost things. Sometimes we do lose things. And I cannot tell you, like, how many times a couple days later, the founder calls us back. You know what? We told you we're not going to be in the round, but we like you so much that we change our mind.
I love it.
And I think that's what the brand stands for. It's not like the obvious things, like the numbers you mentioned. What I really care about is that, like that at the edge where you have like 0.1% hope for the 0.1% company and everybody's like pulling in and you're doing 5 things that nobody else does. And finally the founder says, I see it. You're in. And that's the magic moment for us. And the combination of all that is the stats you mentioned in the beginning. And when you mentioned those stats, I wasn't really thinking about the stats, but for each one of those, I was thinking, you know what, for that deal, the 20 times where things were going sideways, when we thought we were going to lose it, when we were like, we don't even have a prayer, will this founder ever listen to us? And now, like, you're mentioning those and saying, wow, like, that's actually an IPO now for you. That's a victory for you. That's a win for you. And now hearing that is like, wow, that was worth it because we know the journey that took us to get there.
I love people that really care and like clearly love what they do. And that just like oozes from you. So I think that's really special. I was also listening to a podcast in prep for this, and I had heard on your Kindle, it was all Navy SEALs books versus the traditional like executive and management books that a lot of folks in the Valley push. So I thought
all Navy SEALs, all spies. I also tell people this is an intelligence business. I think that if we were also getting into secrets, everybody thinks this is a math business and a finance business, but it's really a people business.
Yep.
And so I think my most underrated quality was because I have done sales in 40 countries for Google, I had no choice but to either learn languages or learn how to communicate with people, understand and get them. I mean, as a phenomenal recruiter, you do this day in, day out. You have to really know people and you have to really know what makes them tick. So, that's it. And I don't think you can do that if you don't love what you do and if you don't care.
Back to the outliers for a second. When it comes to spotting outliers, what do you think most investors get wrong? And what does it really take to identify these outliers before they become obvious to everyone? Well,
first of all, let me start maybe a little bit more humbly and say we take our best shot at identifying outliers. The way I think about it is if we basically have an edge of like 10 to 20%, not 100 because it's never 100%, I think we're going to do well. And what it is that you have to see something that other people don't see. So something that everybody thought would be my greatest Achilles heel is the fact that I don't have an engineering degree. I mean, I'm pretty technical, but I think what people sometimes misunderstand is if you're an expert, if you're a specialist in a field, you're going to look at an outlier idea and you're going to see 20 different things that can go wrong because you spend your whole career on it. You got your PhD. Maybe you were a VP at a company. You're going to remember the 20 years you spent and you know what? We did it this way. Why would it go the other way? Meanwhile, as an outsider, you're like, wow, this sounds like a great idea. This is a very important problem. Can you explain to me how you want to solve this problem? And so we look at it differently. And to me, like what is a weakness for me? First of all, I turn into strength because even if you're the world's smartest founder, if you cannot explain what you're going to do and how it's going to work in a very simple way, I think it rarely goes to where you want it to go and turns into a rocket ship. But then the next thing is very important, is that you have to understand at a fundamental level what's going to make a company from the very beginning, when it's nothing and it's not meaningful, a rocket ship, is that they get something fundamentally right that is not obvious to many, many people. So you actually have to suspend belief and see something that's probably going to take hundreds of steps. Imagine that future and say, you know what, that future, even though it's like 1% chance, we believe that it could be done and we're in. We believe it, we see it, it's going to go there, and we're going to do everything we can that 1% chance out of 99 others is the path that this company is going to be on. So that's what it is. And I think this is our secret sauce, is that now that we have seen this game play, this movie play in so many sectors, in so many geos, I think we have really started understanding a little bit better of what makes Outliers what they are, what makes founders outliers, even though literally every single one of the founders that we work with is different in so many different ways. They also have striking similarities that nobody would, imagine or guess.
I want to shift to the team, quickly. So Felicis today, 9 investors, 2 managing partners, a managing director, 4 GPs, 2 partners. Growth has been very deliberate. People have been promoted to partner, making GP. You recently brought in Peter Deng as a GP from OpenAI. As a recruiter, when I pitch new partner and general partner searches, we always talk about like the bullseye comp. And there was a stretch for about a year or so where Peter's name was mentioned in just about every GP conversation about if I could get Peter, right? Chief product officer at Airtable, VP of product, sat over consumer product, ChatGPT at OpenAI, could have gone to any fund in the Valley. Why did he pick Felicis, and how did that all come together?
Well, first you're going to have him on your podcast and ask him, because that's something that I would really prefer for him to answer as well. I think not only did he have his choice of venture firms, and there were at least a handful of them, and maybe a few that I know and a few that I don't, but also operating roles as well. Yeah. Look, here's the interesting thing. For us and a few of our LPs, they were very excited about that. For some other LPs, they really didn't understand, because there is still this orthodoxy that, hey, like in order to be a good investor, you need to start with a track record and you need to show that you've done really well. And only then we can believe that you can do this. The reality is, look, what basically made somebody successful 10 years ago is not what's going to make them successful 10 years from now. So we basically wanted to work with Peter for many different reasons, but one of them is that, as you mentioned, he's been with 4 different outliers. The second thing is, let's be honest, we're in the age of AI. OpenAI is one of the companies that's leading that age. So having an executive at that level from OpenAI was really critical. And for that executive to choose Felicis and nobody else is a really big testament to how differently we think. And that, hey, like it could have been it could have been one of the venture firms that invested in OpenAI. Totally. We didn't even invest in OpenAI, but I'm really excited about that. And one of the things that I want to do with that, we talked about the team growth, and honestly, I don't really care about like any of the titles or anything. Anybody in the firm, regardless of the title, regardless of their seniority, we never tell them you can or cannot do this, right? Like I always tell them, sky is the limit. We are here to support you. We got your back. But what I want more than anything else is we see them as key assets, in the sense that for us, the thing that's really valuable is their network. The unique skills they bring. What I think about it is, in some ways, we're kind of trying to have our funny version of Avengers. Everybody has a different superpower. Like we talk about diversity, but for us, diversity is your background, your beliefs, like, and every one of these people, some people are sourcing superpowers. Some people are great at relating to people. Some people are great closers. Some people can do many of the different things. But our team is essentially everybody with a different superpower, and bring them together, bring them together, lead them to a win. And I think like what drove Peter is that basically 2 main factors. One, we really truly act as a team and supportive. So he felt that there was not going to be any drama. and then he was not going to be capped into things that he can or cannot do. And I think one of the things that he loves about being here is that it's been so different and unexpected of all the different types of investments that he could make, and nobody like put a limit on it. But the other thing that was really important is just the speed and steepness of learning. Our learning curve is always very steep. And I think that's one of the things that essentially bonds everybody here, because if we're not all having fun and learning to do something better, then what's the point of doing that? I don't want to keep doing the same thing over and over again. And so one of the things that we learned when we were bringing Peter is that I think 10 years ago or 15 years ago, we were not really optimizing for people's background. And we were saying, oh, like, we really want people to have outlier exposure of somehow. And I think one of the things now we have switched our belief is, first of all, we need to bring outlier people to our investment team. And best way to do that is seeing like if they've been exposed to outliers. I think the second thing that I will add, and I'm like now like fast forwarding to future a little bit, is that we also look at our structure and team and like, we want to be much more aggressive in creating entrepreneurial opportunities, whether it's kind of formalizing our office in New York, expanding it, whether it's looking at our different strategies and say, hey, like, could this strategy be owned by a person and led by a person one day? We need to give people entrepreneurial opportunities. How Google went from Google to Alphabet, I think it was a brilliant idea by my good friend Salar. And he basically realized, look, we have these amazing people at Google. Every one of them wants to be Larry or Sundar. But the reality is there's only one Larry and one Sundar. But if we basically like have this thing where like essentially Google is Alphabet, a conglomeration of all these different groups, initiatives, and companies, now you have like 29 more people that can have the CEO role, 29 more people that can have the CRO role, and all of that. And entrepreneurial, ambitious people want to have that opportunity. And so if you were to ask me what is something that is not yet there at Felicis, but something we're really excited about and maybe a little bit of a cliffhanger, is we are looking at not of what we are, where we are today and all these great stats, but how can we take those stats and multiply it by 3 to 5x? And I think the only way we're going to do that is to be the right place where entrepreneurial people can feel I can either start a firm or I can also partner with somebody like Felicis that still thinks like a startup, where there might be some advantages where you get all the benefits of starting something and owning something and having responsibility, but with full support and a platform that's already way ahead.
I don't think there are many other venture firms that a founder could have support from an OpenAI VP on the product side during the launch of GPT and a Midas-less investor who's been in the top 20 for over a decade. So I think that's a really cool edge. When you think about like folks like this that are transitioning, I've seen your, back to me being a recruiter, when I'm talking to partners, one of the themes of why they're taking my call is they don't have a clear path to GP. I looked at Felicis and you promote and develop people here at the firm.
Yes, we do.
I think that actually is a bit of an edge in itself when you really zoom out and look at the industry, especially the folks that I have as your peers. But how do you think about building, developing talent inside the firm, especially when it comes to growing folks from within?
I mean, I feel like here's the attitude that I have. We see people as our most important asset. And my philosophy on this is, look, you know, we obviously are changing and revamping ourselves, and it's like a sports team. Some people stay with the sports team for a really long time, and if for whatever reason our direction starts diverging from what makes people really great and where they feel they can be their best version, you know, maybe those paths might diverge. But at the end of the day, the most important thing is we don't see people as disposable, right? Like, we will invest the max with them, and the thing that we ask them is, just be open-minded and, you know, be ready to grow and like push the edge and push the extreme with us in as many ways as possible. And one of the things that we really want people to feel like they can do their life's best work. And if they see that nothing is a sacred cow, that anything is possible, that we're willing to change how we operate, you know, our main strategy stays the same, but the execution can be very different. And if all those options are open, people start thinking of what's possible. Versus when you're like any other firm, it's not that they don't have an amazing track record. Of course they do. But when you look at them and you ask them like, would you be willing to try this? Would you be willing to try that? Or the same thing. Like at the end of the day, the things that we mentioned, like GP, track record, whatever, it's essentially like having faith in someone. And we have people that started in like more junior levels and literally within the first few weeks were thrown into deals and were able to have an impact. And then we have people that came in like much more senior experience, similarly having no investment experience with our guidance and support, have also been thrown literally into the ocean, not when the sea is calm, but when we're having like a category 5 storm, and came at the winning end of it. And when you have that experience, you never want to go back. You're like, let's go do that again. And maybe I should lower it to category 4 storm, but I always feel like it's a cat 5 storm. So I think at the end of the day, what people want, like if I can read between the lines, it's not like as this title, that title. People want to know if they're going to work really hard, is it going to be valued? Are we going to cap their potential? And if they do a really good job, do they have enough upside and ownership? At the end of the day, the simple insight is people want to know, first of all, am I going to be with great people? Am I going to be valued? And if I do a great work, will I get upside for that?
Totally.
And for us, all the answers have to be yes. If it's not, we're not going to be with the world's best. And how are we going to go get the world's best companies if we don't have the best? But the only thing I will tell you is that I think one of the magic that happens at Felicis is the fact that we have been around the block, and similar to when I started at Google and I was working with Larry. Larry had like 10,000 plus hours in search, and I felt like I was working with a Jedi master. There was nothing he didn't know, nothing he didn't try. Like he literally had absolutely mastered. And what I want to tell people is everything that they have, they don't appreciate the assets they have, which is their network, which is the people they know, because they might not care about me. I might be a different age group. I might not have the right interest. But sometimes what they underestimate is I'm not even going to use the word pattern recognition, but having been to battles, like having seen how things have gone wildly wrong and sideways, that experience is something that you can't buy. But being next to that experience with that and still having the crazy ideas and having the chance and having no noticeable guardrails and like knowing that, hey, you know what? Like we can pretty much go in any direction and have influence over it. I feel like that's the best of both worlds.
I love it. You mentioned New York. Mm-hmm. Felicis has offices we're here in Menlo Park. I know you have one up in the Presidio in San Francisco.
We do.
And then you had mentioned, I think before the show, Soho was the location for the New York City office.
Yes. So we had a presence in New York and we wanted to make it more serious. So we basically got this beautiful office in Soho, which we are right now setting up and decorating. So we had a co-working space. I think the other thing that we wanted to show is when we commit to something, we commit to something. We are not dabbling. We're not in it to play games. We're not in it to do like 20%. And I think nothing, sends a message louder than, hey, if you're serious about New York, then why don't you have an office there? And it's not a dinky little, hey, like we're dabbling. This is like a fourth rate, but like, hey, this could be like New York headquarters of this firm.
Yep.
And our dreams are big. Our ambitions are big. We just want people that, hey, ambition and I think a friendly team atmosphere should not be mutually exclusive, right? Like I think one of my thesis on this is that I have seen high performance rob the soul of people, right? Like you can get some very, very high performance, but never be happy and feel like you've lost your soul. And my idea is that why can't you not have great performance, but also go home happy that you have not made any compromises. You work with nice people and you still made hard choices. Like we make hard choices about our LPs, our founders. There are many ways that you can make money and we don't always say yes to everything. And we can also have much larger funds, but we don't say yes to many LPs. So I think knowing that yes, we are ambitious and we want to stretch, but we also know where to draw the line and, we really know what we stand for and we know what our values are.
I was in New York a couple of weeks ago and I was staying in Soho and I walked past Cursor, walked past OpenAI office. I think historically, when I was first coming up in recruiting, a lot of media and publishing companies had the best engineers in New York working for them. Hearst, the New York Times, Refinery 29, brilliant engineers. The next wave was definitely Web3. Big bug in New York. A lot of folks fell into crypto, brilliant engineers. I see those same folks now coming into AI companies, joining OpenAI, joining Cursor. I know AI is a massive component for Felicis right now, trying to get into the best AI companies. Was that a driver behind the commitment to investing in this New York City office? Was, since your international proximity to Europe, a factor there? Or did you just want the stake in the ground to New York? What was the driving decision there?
Look, I think there are many obvious reasons. It's also inspiration. I mean, it is not a coincidence that when you walk into our office and I didn't tell you what we do, and you see the white, you see the orange, you see the modern style, you might say, you know what, this is an architect, maybe a designer. It's all by choice because we are required to imagine the future. And in some ways, we think of our team as creatives, because we need to think of a future that doesn't exist, just like creatives have to envision a product or an idea that doesn't yet exist and will it into existence. There were many important things. Look, at the end of the day, we are looking at like talent concentration, like company concentration, but also like Soho is a location, like when you go around, it's really known for design. It's known for timeless brands. It's a very special place. Part of it is by association. It's where like Prada has its like signature, like retail store, you know, like all these things. Like, does it really matter? It's essentially the inspiration. Like, yes, we think like the Prada of AI, like could also be here, could also be in Silicon Valley. And I think, again, it's just the idea that, hey, you know, our aspiration is not just to be great, but to be great in a timeless way. And so I can't think of like a better location other than where we are, and with the addition of Soho, again, that is a symbol of our ambition and aspirations of where we want to go from here.
Let's pretend I'm a 22-year-old engineer working at a startup. Maybe I'm working at OpenAI. I'm really interested in venture capital. I haven't wrote any angel checks. I'm starting to think about writing angel checks. How would you advise someone like me who's trying to break through venture, who's never worked at an institutional fund, set myself up to break through?
Look, I think, first of all, this business is all about networking. What I would say is that the most important asset anyone can bring is their network. And I think important point to mention is I see a divergence of people that are extroverts and introverts. So the first thing is, I think it's very difficult to succeed at this job if you're an introvert. So you really need to learn how to hack being an extrovert if you're not one. But expanding the network, just running into a lot of really great people, not just the people that are friends or people you know from school or people you like, but just having kind of a broader network of people of different, you know, functions and skills and all of that. I feel you can always get exposed to venture firms. I mean, everybody is very friendly these days just to get access to, hey, like there's a lot of scout programs and we have a lot of initiatives. We love working with people. We love giving them a chance. I mean, so that I think another good thing to do is like, essentially, I don't think there's any better learning than actually doing it. And the last thing, as I mentioned, is that this is an outlier business. So if you're lucky enough to work in an outlier company, obviously that's really important, but you can also surround yourself with a lot of outliers. I mean, you know, there are many great people out there that I have really great respect for, like Harry Stebbing started a podcast, and I don't think he's ever done venture before that. And I don't think he had a huge network, but through that, like he's been able to jumpstart things. You're doing an amazing job in recruiting. I mean, people can have an edge in so many different ways, but I think what's not negotiable is you really do need to understand outliers and find a way and some framework that gives you an edge of finding outliers better and sooner than anybody else. And you also need to build a network where you can go to them for many different reasons, ideas and other stuff, but also just to be able to vet different thoughts and different perspectives.
You built a lean but very high horsepower team at Felicis. Relative to AUM, which candidly is for the first time this year a metric that has come up, headcount per AUM by a couple of investors. And it's this theme of like folks are gravitating towards like lean, high horsepower teams. And I think Felicis has done an incredible job about that. Beyond the structure, I did a ton of research and founder stories before this. There was a theme of just like a culture of scrappiness and creativity that people speak about. Some of the stories of how you got into these different early deals are out there that I think is super interesting. But today, venture is all about maxing ownership, concentrating bets in the best founders and companies. I think it's never been more important to get creative and scrappy. So I'm just curious, can you share a moment of that scrappiness where it tipped the scale and helped you break into a competitive deal?
I mean, we have done so many of these. There's been so many examples of trying to relate to founders. And, some founders, for instance, really prefer workouts. There's been meetings where I showed up and a founder is like, oh, you like working out? Like, how about you give me 50 push-ups? And my partner, Sandeep, was filming me doing, having me do 50 push-ups on the spot. And there's been many other examples. I think one of the things that is both different for Felicis and is also really fun is that we really truly treat every founder as a one-off. And, whatever is their interest, I think we really try to kind of forge bonds, and not just in the trust and the empathy that, we want in them, but also like if we can have an experience where they get to know us better and we get to know them better, like huge bonus. But like, I don't think there's been like a lack of idea in like getting creative of getting true to a founder and, like basically like trying to figure out, like we flew to places, we've done like crazy stuff. We've taken them to tracks, we've taken them to like extreme sports, like whatever it is, like whatever it is that helps them to get to know us and for us to get to know them and build trust and empathy, like we're there, like we're happy to do it. And I do think that we kind of coined the term boutique VC. It's very hard to do that with a much larger team and much larger firm. To be honest with you, it's a very difficult thing to find that sweet spot of you have enough scale to be able to execute the strategy really well, but not so much that you're giving up a lot of upside or you're reducing the probability of it, or the team is so big that you can't have that kind of custom feel. Like if you're a founder, you don't want to be surrounded by a sea of people. You really want to see that it's a small team that can act mighty and it's essentially just like a startup. Like that's the power of the startup. To move fast, you need to be light, and you can't do that with mass.
You're one of very few folks out there that have built a truly generational firm and are still running the firm. There's been more spin-outs, I would say, this last 12 months than ever before. I started Nucleus on the whole thesis that I think the venture landscape's going to look incredibly different in the next 3 to 5 years. And I think you're going to be a big part of that, of driving that. I don't work with legacy multi-stage platforms. I do think that there's a huge advantage to breakouts like yourself and the Felicis team, down to some of the really exciting emerging managers of today. If one of these emerging managers that we think highly of is raising fund 1 or fund 2 right now, what's one piece of advice that you would share about choosing their first anchor LP?
I think the most important thing in the first anchor LP, similar to like how we talk about founders, you do need to find an LP that believes in you. I think a lot of times for me, the subtle difference that I found, you need to separate. For LPs, at the end of the day, they're also performing a job. And the way they usually work is they have checklists, like they're trying to create a portfolio or they have a strategy and they're trying to put people into boxes. And they might do that for the right reasons. They might do that for a perceived reason. For us, because we were so unique, we were really lucky in the sense that we knew that everybody that committed to us, especially our first LPs, had to believe in the crazy or different ways that we wanted to perform venture capital. So we knew that they were investing for the right reasons. I do think that it is important, like at the end, like somebody can say, you know what, money is money, like I want to be in business. But it is important that it's a long-term relationship, that the people that you're taking money, especially the first check, it's going to set the tone, it's going to set the culture of the firm. And if you have the luxury and the chance to choose people that not only want to invest in you as a the first fund, but also believe in your strategy or however it is that you try to differentiate so that, hopefully you'll achieve success. I think, again, having people that genuinely believe in that as a key motivator and driver of that first check, I think that would be really nice to have. we are very lucky to have that.
Incredible. I'm going to close with a quick rapid fire.
Let's do it.
I mentioned all of the spin outs and emerging funds right now, and there's a lot of them that are really exciting, right? I'm curious, someone like yourself, as you look at the landscape right now, what emerging managers do you have your eye on?
I mean, there are a number of them, but I would say Sarah Go especially has done an amazing job. I'm really proud of her. She and I are graduates of the same program at Penn. And I have to say, not only has she done a very impressive job, she's done it with very little resources and in a very short amount of time. And that's kind of the startup hustle. So I think sometimes people forget that everything we do, whether it's the founders we back or you're a first-time fund manager, not only do you have to be excellent in what you do, but it's a race against the time. So your speed with which you do things and learn and like implement is really, really important. But no matter which dimension that you look at, I think she's done a tremendous job. So hopefully she can be on your podcast as well.
Thank you so much for spending almost 2 hours with me when we blocked off an hour. And I appreciate you making the time. And thanks so much for being the guest.
Thanks, Alex. Awesome. This was exciting. Appreciate it.